Now recording, and here we are starting. So hope everybody had a great weekend. Had a nice, relaxing weekend. Was able to unwind and basically be ready for this weekend. And I hope everybody else was as well. So over the weekend, I was looking at XLU. I tend to go over charts, even when I tell myself not to look at charts, just to clear my mind. It's just a way of preparation for me. It's how I prepare myself for whatever's to come this week. So last week, we traded XLU. That was our main focus for the week. Then we jumped into and then we played XLE. We were playing basically utility. So utilities play a major part when it comes to market and rotation. You know, you see where the money goes to, where everybody runs to. When regular stocks or regular tickers, you have like QQ, which is another ETF, but like technology, tech stocks, you have, sorry, I'm having a brain fart right now. Your tech stocks, our regular ticker that we trade, you have like Tesla, you have like Rivian, and it's a lot of things I've stayed away from this week, past week. Why? Because I just don't see that setup running anymore. But what really caught my mind this week and over this weekend was XLU, and I'm going to show you exactly why. So when I'm looking at a trade opportunity, I first run to options. I'll look at something and I'm like, why didn't I look at this Friday? I was so stuck in the trade itself, like focusing on just the trade itself, that I didn't pay attention to the most important thing, this resistance, the 77.28, which I basically pointed out on the team. That's a major point. And that point there, that's an all-time high. That trigger there, anything above that was a long, but that's also a resistance. And anytime you see a resistance or a new all-time high, it tends to be a good opportunity, short-term short, or also a long-term short as well. So as you can see from February, well, this is February, yes, March. This is March, February, I'm gonna go over that right now. This is February 23rd. The lows there was 64.28. From then on, we ran to 77.23. And then we peaked at 77.28, where we rejected, which is 77.23. 77.28 is my basically retracement point. So what I used was a retracement tool. And I'm going to explain to you how I use that for this to get that exact point. Sometimes it can be off. It doesn't have to be an exact point. The closer, the better. So what I'm going to do is I'm going to use a weekly chart. I'm going to show you exactly what I did here, how I got that point. So here's our weekly chart. So what I did was I used the previous all-time high, which was 71.22, and then that pullback of, what was this? What month was this? This was for March of 2020, right? So from there, that's where I did my retracement tool, and that's how I got 77.28. Pretty close to 77.23, not too far off. So what I did was I used that all-time high there, that peak, and then I brought that straight down to the March lows of 2020. And what happened? It gave me 77.12. I don't know why it gave me that there. Now it changed. I don't know why it changed, but it changed, as you can see. But regardless of the fact, 77.12 was a very important level. We peaked above that at 77.23, but we closed just below that. So from there, I was like, okay, we're here. And then I started going down. I started going to daily charts and I started looking at the setup. Okay, we peaked there. So I start moving and I'm like, okay, usually when you see somewhat of a hammer or doji-like candle like this near an all-time high, it tends to reverse from there. So what I do from there is I start looking at past trends. So I start going back. you don't need much of tools to figure these things out. You just look at past setups and how it reacted from the last time it hit an all-time high and how it rejected off that all-time high. And usually candles at an all-time high, you get an inverted hammer, which signals exhaustion basically at the top. So buyers are getting exhausted, sellers are coming in. So I look at the daily chart. I saw this candle here and I'm like, you know what? This looks like a good short term. And as I tell everybody, and I tell you guys, when you have your resistance, your level in place, your first target below that is either your support, or here, the support would be 7106. That's a long move. That's a 6-point move down. So what I'm going to use is my upper Celt, my 14 SMA, my 20 SMA, which is your middle Celt, my 30 SMA, which is the yellow line there, and then the lower Celt. These are going to be your 5 supports. Now with that, what you can do is, just to reference, just in case you don't want to have them on your chart, you have them on your chart first, you put a line, you put your level there at that one. So right there, that's going to be your upper Celt. Next is going to be your 14 SMA. That's another level. And then it's going to be a 20 SMA here. We're going to come down to your 30 SMA. And as you can see, 7106 is the lower Celt. That level basically goes with my retracement tool, which I love and makes it even easier. Now from there, as I said, your upper Celt is going to be your first short target. So I'm looking at 75 puts. This is why I said in the chat, we're looking at XLU puts first thing Monday morning. So what did I do? I go to trades. I look at the option chain. I'm like, all right, I want to see 75 puts for next week, the April 22nd. So April 22nd. And what do I see? I start looking at everything. I look at volume, I look at open interest. The open interest is at 4,000 for the 73 puts. And that's for next week, not this week coming up. But if you focus on this week, you're going to see a lot of volume on the put side. As you can see here, you see 4,000 volume on the 76 puts. You see 100, you see 396, you see 171. But if you look across to the open interest on your right, the open interest shows 6,000. When open interest decreases, that means whoever is in those puts or calls, when that decreases, they're exiting. The more it increases, the more people are building a position into that. I don't really focus on that, as a lot of people do. A lot of people focus on flow. I can care less about flow. Flow is not my thing, and I don't trade off of flow. But I like to use this in the option chain. I like to look at the bid, the ask, the volume, and last size. Last size is a good way to get an idea of what's going on and what they're doing. So if you said, okay, Ninja, look at the call side, look at the open interest on the call side over here. Let me get my tool first, actually, so I can show you guys. It makes it easier. This is your open interest on the call side. These are all of your open interests. And another thing you have to understand too is people like to gamble. So you can see, you're gonna see a big size open interest on both sides. The thing is, that does not mean, I mean, some of them could be, they could be selling puts, they could be selling calls, they could be buying puts, and they can be buying calls. Sell the open, buy the open, vice versa. Nobody knows, only those that know how to read flow understand that. Me personally, all I read is charts, and charts tell me everything I need to know. Hence, if I see volume on the side that has my attention due to the chart in question here, let me go back. 77.12 was resistance. We couldn't close above that. When you see this type of pattern near an all-time high or at a new all-time high or at your resistance level, this right here alone, this is a box in reverse, similar to if we did this. And I showed you guys how to do this. You invert the chart. You put a minus in front of the symbol and you type the symbol in. I don't know if this works with other programs, but I know this is, I do this on TOS all the time. I only use Thinkorswim. And if you look here, this is an inverted doji, not a hammer, but an inverted doji, basically at the bottom. So my first target would always be that lower kelp. So what we're looking at here, this is going to be a box. We're looking at a box to form. And this is a daily chart, so keep that in mind. And with that box to form, it will form something like this. And I will show you. Not precisely the way I'm drawing it, but you guys get an idea. Usually when I draw it like this, you guys know exactly what I mean. But this will be basically the box. This is what we'll be looking at. Now, utilities need a breather. Target is your lower kelp. That is 75.32. Take a 75 puts this week. Play it as a lotto if that's what you want to do. Me personally, I would take 75 puts next week. It's not. I'd rather be safe than sorry. You know, you can always be early, and being early is not fun because you have to wait until the move actually happens. When you're just right there on time. So what's going to happen is those that bought puts Friday, they're going to need a gap down to start tomorrow. Basically, as you can see in overnight ES, we're gapping down. But XLU and utilities tend to decouple from overall markets. They do their own thing. So with that being said, I'm looking to go for puts for XLU. It's not a bad bet either here, because the risk reward based off of how XLU trades, we can get an easily 50 to 300% move if we do see 75.32 by Friday. On average, I look at candles as well. Last Friday's candle range was 92 cents. Sorry. Prior to that was 89 cents. Prior to that was 165. But I like to look at weekly candles. The reason I look at weekly candles is I like to get the overall weekly move, the overall weekly range. Here we got the weekly candle. So last week's range was 3 points. Prior to that, 3 points as well. And prior to that, 2.47. So we're looking at 2.5 points down from all-time highs. That puts us basically at that lower kelp. Keep that in mind. This can continue upwards if we uninvert it, or this can be the top put in. Put two. Let's get two charts up here. Let me make sure charts are on the same thing. Give me a second. Okay, I don't want to do it this way then. Nope, forget it. Let's just keep it like this. I'd rather just go back and forth. So let's go to the standard chart. So my first target for this week would be 75.31. Depending on where we gap down, I like to look at the intraday chart. So I use my 15 to 30-minute charts always when the market opens. Why do I use it? It's just something I prefer. Everybody is different. Just because I use it doesn't mean you have to use it and you're going to use it the same way I use it. I just like to look at the 15 and 30-minute charts because they're just easier to read. See, setup still looks somewhat bullish. This is also a channel forming at the top. You get a break above 77.12 and they can close it above that. The target is 77.47. But if we open below 77.12 and continue to reject, your target is 76.29. I always like to go for the lower kelp, and this is a 30-minute chart, so it makes finding the short-term, short or long, easier. As opposed to a daily chart, the range is a little bit different. If you were using your upper kelp and lower kelp, it's a bigger move down. Now, another thing that stands out to me here is this candle here was an inside candle. We closed literally just above that candle. And then usually what's to follow is a downside move. So 75.99 would be the next target. We're using the previous candle from Friday. We're using Thursday's candle 4.7. We're going to use that low as the first target. Any break below 4.6 candle, which is the opening of 75.63, confirms down to the lower count. And then so on and so forth from there, your next target from 75.31, you get 74.22. My whole goal is to teach you guys how to look at everything in a simple way rather than overcomplicating it. Rather than, this is why we're off of Twitter. Being on Twitter, they don't know what they are doing. I am sorry. Whether they act like they do, they are right once in a blue moon. The point is not to be right, it's to be profitable. Nobody wants to just, oh, I called the move, I called the move. If you're not in the move, it does not make it, it's not relevant to say you called the move. You called it, but did you capitalize on it? If you didn't, talking about it, there's no point. That's just always been my thing. That's another reason why I left Twitter. Is like, I'm tired of just seeing people do this and people think they know everything. But at the same time, what? They depend on my tweets. They depend on me sharing my trades. They depend on me giving out free trades. No, I'm tired of doing that. I'm tired of doing that for people because at the end of the day, they come back and it's like, oh, they're experts now. So let the experts be the experts. So I want you guys to just, every opportunity that we get, you take it. Last Friday, I wanted you guys to force your hand to lock in that profit. 2 days, you got Friday. Premium or decay already is already hitting on a Friday. So if we closed basically 10 cents above where we bought in, but we got in at, let's say we got in at 35 cents, right? When we got into so for 77 calls for this upcoming week, 35 cents, it hit 50 cents to 55, if I'm correct. Locking in right there, why not? Because at the end of the day, it closed at 45 cents. Somewhat, I think 35 cents as well in between there, like a break even. Now you have 2 days of decay over the weekend. So if the price does not gap up Monday, if it gaps down, all those profits are wiped out. So when I say lock in, why not lock in? Cash accounts are the best way to trade. It doesn't matter if you do 2 trades and you get a violation. The violations are not costly to your account. And what I mean by that is I can have a $500 account. I can use all the funds today, flip it, next day, do it again and keep doing it. It's a cash account. So using the funds that you have there. And the thing I love about options is options settle 1 day, as opposed to having stocks 3 days to settle, unless you have the funds made available. And if you don't, you would have to bring funds in. Hence why I like to trade options. So back to XLU. I'm just dabbling. I'm just getting you guys, I want y'all focused this week because you guys have taken small accounts to sizable accounts. And then you guys beat yourself when you come back to where you started from because you make the same mistake over and over. I do it just as well. So nobody's perfect. But in order for everybody to stay focused, you guys got to stop worrying about missing an opportunity. That's why we fail, because we want to be in everything. We want to try to double our accounts very fast. And like I said, the best money is slow money. Slow money is the best money. Why is slow money the best money? Because when you're sitting and waiting for the perfect opportunity, you have $50 for an option trade. You see an opportunity that you can make 50% on. That's $25 with $50. You just made 50% on your $50. As opposed to chasing something, you get in and you're the one that just bought the top. Now you're praying and you're asking a trader, you think it's gonna go? You think it's gonna go up? You think it's gonna go up more? You think it's gonna go up more? And what happens? It keeps going against you, and now you're holding, and you're still holding. You keep holding. You keep holding. You keep holding. And that is everybody's issue. We hold and hold and hold and hold and hope that it comes back. And what happens? It doesn't. You start holding the bag. So what I'm here for and what I'm here to do is to make sure and keep you guys in check. I'm not here to hold your hand. I'm not here to tell you to hold the trade. I'm not here to tell you to get into the trade. I'm here to teach you how to get into a trade and when to exit a trade. I teach you that you're using your supports and your resistance as entries and exits. It's just that simple. I had somebody in the group like, oh, I'm down 32% in a core position, or I'm down 60% in a core position, that a core position that was once up 50%, 20%, 15%, 30%. The amount you were down, you were actually up. And I know everybody can agree with this. I see it over and over and over all the time. And it's like, why are you holding on to something? Knowing how volatile this market is, it can go, it swings one way for 4 days, and then it swings another way, and it just wipes all those games out in one day. Why hold on to something, one, with no guarantee that it's going to go, it's going to overperform, it's going to outperform? And that's another thing that everybody does. It's like we're hoping that it's coming back. Last week, I was okay taking a loss. You have to be okay to take a loss. How are you going to enjoy a gain if you can't accept a loss? I don't want this like to be like a live to where, actually I do, because I see it day in and day out. The chat, it gets quiet and I like it, but it's more quiet because I'm seeing a lot of you guys are focused, you know. But another thing, you can't ask somebody who's holding what. It's every man for themselves. But another thing is asking, oh, who's still holding this? Who's still in this? I'm holding this overnight. That is not what we do here. And that's what I don't want. I don't want people focusing on, oh, somebody else is holding this. Oh, Ninja's holding this, so I'm going to hold because it's going to go. No, it's not. That never works. And I hate to be the bearer of bad news. That is not true. I just have a high risk tolerance. My risk tolerance is higher. When I see something, it's either I'm going to take that loss or I'll take the loss and roll it. And I'll end up either breaking even as well as making my money back or making more on top of that. It's like adding to a loser. You don't add to a loser. That's another thing that people do. We're going to add and add. Just because I'm adding doesn't mean you should add. Add when price confirms. I add until a certain area hits. That's why I trade SPY the way I do. And it's always been why I trade SPY the way I do. I know how SPY works. I know how it reacts to my levels. And I trust my levels. I trust my levels. You shouldn't be trusting my level. You should be trusting your levels. Because if I'm not, my goal is to not make sure everybody's trading every single day. Trading every day, if you want to be financially free, you shouldn't have to trade every single day. 1 trade, 2 trades, 3 trades a week, 2 trades a week. You can make 1 trade a week that makes your whole week. And you can step away. But I see it's hard for a lot of people to do that. It shouldn't be that hard to step away. It should be easy to step away. Because you made your goal. Now you're just being greedy and you want to go back in there and you just want to keep losing money. That's basically what it is. You're giving back what you just made. And there's no point in that. So I'm here to help you guys get through that. And it's very easy to do. And I'm done for the day. So if I post something else new, it's more so of, I'm watching this. I like this setup. This is something to keep an eye on. You have people that, it's funny, I can post something like, oh, I'm looking at this strike for this week. And I already see that volume start moving and I'm not even in the strike. And that's another thing. People just like to jump. I don't want you guys to jump. I want you guys to think before you jump. I can put out 50 plays a day. There's no guarantee that all 50 will hit. There's not even a guarantee that this, not even a guarantee that just one will hit at all. But if you see an opportunity and you are in green, take that green and run. And I think that's a hard thing for a lot of people. Take it, take the money and run. There's nothing wrong with taking that money and run. It's your money. Take it. And that's an issue with a lot of people have. So let's get back to this again. So XLU focused this week to short. Last week was to long. It went inside, created a candle combo, and then we got outside. We went inside up, and then we stalled below 77.12. If we closed above that, it would have been bullish, but we didn't. So now I'm looking at a short opportunity at 75.32. The goal, whatever percent of the account that you use, you have a $500 account, you have a $200 account, XLU is the best ETF to trade, or any other ETF you like to trade, that trades in increments of 5, 10, 15, 20, 25, 30, 35, 40, 45, 50 cents. You can buy one contract and double that. Everybody feels I need to buy 50 contracts. I need to buy 1,000 contracts. No, you don't need to do that. That's gonna make you lose money faster. You want to trade smarter. So XLU is on my list for a short this week. I'm looking at a lot of tickers. A lot of tickers, because I want to focus. I want to look. I go over 5 different tickers, and I like to see which one catches my eye, which one I feel like would be a nice long or nice short term or long term. Cores are cores. Cores are not meant to hold forever. And I want you guys to get out of that. Then you have to hold it forever. I don't want you guys doing that. Cores are just cores. They're safe plays. You buy time, buy even more time. But a lot of people buy time like, oh, I bought time, so I'm not gonna worry about it. You should worry about it. It's your money. Me, if I make 100 to 200% on a core in a day after we get into it, I'm 90% out of it, and I'm ready to go on to the next thing. I just always been like that because I feel like that's the best thing to do. I like to move around. I don't like to marry a ticker. You marry a ticker, you get caught up in it, and you get emotional. You start trading. You start revenge trading, and that's what we don't want to do here. Here's SPY. SPY is one of my favorite things to trade. SPY is trading in the down. It's trading above its downtrend, and this is the downtrend to be exact. 44, 445, 48. That level. We want to see how that level reacts this week. We are still inside of the 14 and 30 SMA. We have an inside candle there. From that daily candle, we're looking at the 2-day as well. Your 2D is also inside, similar to your 1D. 14 and 30 are crossing. I wouldn't mind for the price to come back down and retest the 14 and 30 right here. But what's been a nice area that's being bought a lot is that 444 area. That level has been bought a lot. So keep that area in mind. But I feel like utilities, they need to breathe. So they will make a good short for this week. Hence why XLU is the target. And if you don't want to trade XLU, you can trade ED as well. ED is under XLU. Another one broke its all-time high. 95 puts work just as well as XLU. 75 puts for next week will work as well. But play the safe route. Don't play the route where you're trying to make quick money. Play it safe. Like I said, the best money is slow money, where you have to be patient, but your premiums, they are going up slow. that's good money. You don't want premiums to go up fast. Unless you're scalping, then that's a different story. You want it to work for you, not against you. And I can see us going inside of this candle and then going inside down. So 95 puts for these, we can see if they got volume there as well. And what? Behold, volume for this week. The 95 puts have 2,313 puts bought Friday, 20 cents to 35 cents. And if you look at the call side, none at all. Volume is under 20 contracts in volume from 90 to 100. That tells me everything I need to know going into this week. Is this going to be an easy short setup? Definitely is. The goal is to focus on one ticker. If it can pay both ways, take it. That's the main focus. And this is what I wanted to go over tonight for this week. And all throughout the week, that's what we're going to do. We're going to go over XLU. We're going to focus on XLU. I want you guys to have XLU embedded in your heads. I want you guys to eat, sleep XLU. Why? Because it's a money-making machine. It's been a money-making machine for years for us. If I can do it, you guys can do it. And I've done it many times. So I wanted to focus on that. I want you guys to get rest. I'm going to go live tomorrow when I get back from the gym. I'm going to go live again Wednesday. The goal is to go live Monday, Wednesdays, and Friday I'm not because I get my daughter Friday. But we're going to go over that. But if you guys have any questions, feel free. I'm going to open up the chat right now. Ask away. And I'm going to stop the recording.